2 more minutes, we'll get going. Our guest on the vendor series is Dave Elkins. Dave's been a preferred lender for the company since we started. When I talked about our preferred lender showing up at our open houses, it's always Dave's companies that we use for that. So if you don't have a lender, it's resistant to coming out, then I would absolutely hook up with Dave and get it going. Easy real estate platform, signed a joint venture group with his new bank that he went to. He went to an FDIC in all 50 states, and they are prolific with a lot of the loan process they're going to do you. But anytime you close a loan through them, they pay us a 1/4 point and we send that to you. So if you guys use him, you'll get paid as well. I don't know if your lenders are doing that, but at one point they had started doing that, then they stopped. And Dave's company does it with a joint venture agreement, and we're trying to work out some joint venture agreements with a couple title companies as well that'll pass some money back to you guys as well. So next week is going to be, if you have any wholesalers, invite them to next week's training. It's going to be interim financing. So like wholesalers, a lot of times the banks won't allow something to close the same day. They wanted to go into the investor's name before going into the C buyer's name. So we have a company that's going to partner up with us that does that interim financing. That'll be the guest next week. So if you guys those of you who are in the REI business, if you know some wholesalers, some investors that need that, that'll be another way to, and this guy, we met him last week. He believe it or not, he called Paul Cronin, who's not a real estate agent, and Paul filled out his form, and next thing I know, we've got a meeting with him, and he started coming up because of the buyer's premium, all these ways that we can do this and make it better for your investors and better for obviously you, because now you can get paid to those closings. So that's next week's. I wouldn't miss it on Thursday if I were you guys. Paul, you remember his name? What's his name?
Peter Russell.
Peter Russell. Yeah. So he'll be our guest speaker next week. So that being said, 10:08, it's time to get going. So a lot of you guys know Dave Elkins. He's been with us for a long time. He's our preferred lender. He has come out. He changed companies about Dave? Couple months ago? 3 months ago?
Yeah. Yeah.
And so he's been sending stuff over to us. I'll let him explain all the programs. But again, for all of you, what's the benefit for you having a preferred lender in-house is that he will make sure that you have an agent show up at your open houses, first of all. Second thing is when you close a deal through him, because of our joint venture agreement, you get paid a 1/4 point for that loan. And the third thing is this company is ridiculous with it. He was even telling me about a fix and flip program that just came out. So he's going to be talking a lot of stuff about things that you can go to your investor with, and also talk about some stuff that you can do for your clients. So that being said, Dave, all yours.
All right. Thanks, Robert. So one of the things that has happened as rates have started to climb is you're noticing more and more investors get involved in the game, because your average individual a lot of times just can't afford the payment anymore. They'll have a job making 80, 90 grand a year, which before was more than fine, that is no longer fine. They can't qualify to the properties you need to show them that make them happy. So we've really skewed a lot of our programs to investors. But at the same time, we still have those products available for your typical everyday person to do a loan. Now, we go a little deeper, as in we'll do in-house down payment assistance that places like Normalina, you know how you have Florida housing, where you got to be under 80% AMI, average median income, things like that.
Yeah.
And those are tougher to qualify for, right? Well, We have in-house programs where the credit score could be down to 600 and I don't care what they make. They can make 200,000 a year and we can still do their DPA. So for that case, we can do DPA in almost any state in the country. I want to say 48 of the 50. So any type of situation where the buyer's limited in cash, we have that program available. And it's simply a app that they'll fill out online really quick. And within 15 or 20 minutes, by running their soft pull credit, we don't even have to do a hard pull. Okay. We'll get them an answer of what they could qualify. Maybe they do make less than the 80 AMI, and we can put them in a state or a federally funded program. But regardless of that, we could always do them in-house down to a 600 credit score, under a 55 DTI. Those are normally FHA products. And again, they put no money down. Now, on the investment side, we have the DPA is 3.5 on an FHA normally, and 3% or 5% on conventional. Our in-house product is only FHA. And I'll be getting out, the name of the mortgage company is Novus Home Mortgage. In the chat box, I'm going to put a brochure and some of the flyers that we have for some of this stuff that you guys will be able to take, read, and know. And then if any of it interests you, you can give me a ring and I can get you set up, on updated emails for programs and things like that. Now, on the investor side, and I can share my screen, right, Robert? Yeah, it looks like I can. Okay.
Yes.
All right. So how many here are familiar with DSCR loans? Anybody? All right. So
Yeah.
DSCR loans are debt service coverage ratio loans. So basically what this loan allows me to do is take your, let's be honest, realtors, contractors, anybody that owns a business that writes off every single thing they make, and make them an investor again. So, I just did a loan for a landscaper in Florida who literally gross revenue was almost 800,000 and his net profit at the end of the year was $9,421. So for a normal everyday loan, he's not qualifying for nothing. But with 20% down, I don't look at pay stubs. I don't look at tax returns. I don't look at anything. I look at bank statements and how much rent is that property going to produce. I would love for the rent to be 1-to-1, meaning if my payment for that borrower is $1,800 a month, I am hoping that the rent is at least $1,800 a month. Now, just so you know, I have programs where there's no DSCR rate, which means they could be getting $500 a month on an $1,800 payment and still be able to qualify. That's truly based upon credit in most cases and assets. But as the norm, I'm going to be able to do as high as 85% and probably about as low as 60 if the credit score is 620 and they have no history of owning any investment property, things like that. But we can still get that person done. So if you're a standard investor, I'll give you an example. Let's say you were to sell him a $200,000 home. He pays cash for it, right? And then he does whatever he needs to do. He gets it back up. He gets it sold, right? What if you could take that same investor and say, hey, let's use the DSCR program. And instead of you buying one, why don't you buy 5? Let's use that cash to buy 5 of these properties. This gives them a whole different dynamic of how to invest that money. You can open up their portfolio to many more properties. So now as an agent, instead of one, sell them 5. Does that make sense? So let's say, for instance, you have a $300,000 home that an investor wants to buy. It's completely vacant now. There's no rent set up for it at all, no leases. That's okay too. When we do the appraisal, we'll just get a rent schedule from the appraiser to find out what the average rent is in the area, and then we'll use that number. So it doesn't have to be leased out or rented out for us to do those figures. So again, debt service coverage ratio, no income verification. We don't need tax returns. We don't need pay stubs. We're going to need a bank statement to prove they have the money. And then we're going to want to know what's that rent going to be on that property that they're about to buy. Those are the 2 things that matter. Credit, they could be down to a 620. Now, we could also do that same program as a refi. So now let's say, for instance, you have an investor. They say they love to buy the property. They're just cash strapped right now. Okay, well, do you own any other property? Yes, I do. Well, what do you own? I own a home, Joy in Nashville. It's worth 400. I owe 120 on it. I can go to a 75 LTV on that if they're above a 660 score. So we're 400, we'll lend 300. If they owe 120, they can cash out at 180. Now all of a sudden he's got enough money to buy a couple homes from you. And it didn't have to hit his bank account. We put the money there for him in order to buy more property. So for Greg and Adam and people like you guys that work around the novation thing, think about how strong that could be. You pick up a property knowing you have an investor that only has to put out 20% to buy it from you. Now you can move that thing quick. And you don't have to worry about somebody having to really write you a check for it, right? We do it fast. Those loans close 3 to 4 weeks done. Now, we just literally got a program for fix and flip. So basically, we can go as high as about 93% ARV, as long as they've done over 6 projects. If they've done less, the less projects they've done, the less we'll forward them. Does that make sense? So if they buy a house for $150,000 and needs $50,000 worth of work, after repair value's $300,000, right? They've done more than 6 projects. I'll end up to 93% on that. If they've done no projects ever, I'll end up to 75% of that. 1 to 3 projects, 80, 3 to 6, 85. The rest of the people are 90 to 93. So again, I'll go back. I'm kind of pointing you out, Greg, because I don't see Adam. I don't know if Adam's in here, but if you have that home that you're picking up on the massive discount because it needs a ton of work, right? But you find an investor that's willing to do that fix and flip, right? Now you're getting paid right now, Greg. You don't have to wait on anything. And then on top of that, I'm going to pay you a quarter. So if the loan ends up being $400,000, you're getting $1,000 from me. Now, for some of you that are in areas that we market, and right now it's Tennessee, Florida, Ohio, and North Carolina, we are buying DPA and investor leads every day. So, in the last month, we've done about 350 leads. Now, getting them on the phone, qualifying them, doing things like that is a different story. But the goal is, as we get more agents working with us in different areas, we will open that marketing up to spend money in that area. And Greg, before you ask me, because I know it's coming, it's Google AdWords. So in those cases, those are leads. If you're in those areas, you can call me about. Normalina, you're in Jacksonville, right?
No, I'm in Orlando.
Orlando. Okay. I don't know that I got anything Orlando, but I do have stuff coming in Jacksonville, Tampa, Naples.
I'm in Naples.
You're in Naples?
Yes, sir.
Yep. We're getting leads on the daily down in that area. Those are DPAs. I haven't seen many investors there yet, but we just started that program up. So it may be a little bit before, AdWords really starts honing in on that stuff. Takes a while usually. But these are just the reason why when I was talking to Robert, how I think this fits you guys now is, and maybe normally you could tell me if I'm wrong, or Mike, it's not the same world with regular buyers anymore. With rates where they are, taxes going up, insurances are just out of hand. And where I live, you almost can't even get an insurance policy right now because I'm on the ocean. So a lot of this has become more difficult. And if you could get those homes at a discount or get an investor to put out a portion of the money, not all of the money, how many more deals could that bring to your book of business this year is my question. And I would think for some of you that have investors or no investors, this is a pretty good way to make that happen. And again, I will put these brochures for DPA, for DSCR refis, for regular DSCRs. My brochure here will tell you all the niche products that we have, from second, HELOCs, 1099. We have a bank statement loan, personal, 12 months, all their deposits divided by 12. That's simple. That's how we figure their income. So if you have somebody that got 4 checks all year, and those 4 checks equaled 100 grand or 120 grand, I'm giving them 82 to 10 grand a month as average income, strictly based on their bank statement. So again, 12 months of deposits divided by 12. I don't care if they got 1 check for 150 grand. I'll divide that by 12 and that's their income. We have I-10. So for foreign investors that don't even have citizenship or a visa. So if you get the offshore investors, we'll look at it. Interest only products for investors that want that really low payment. We have that as well. I've got asset utilization programs. They don't have a job, they're doing nothing, their retirement pays them nothing, but between IRAs and everything in the world, they have $2 million. I'll use that. I'll create their income off of what they have in assets. So these are all things that we can do on top of what just the standard loans are, the conventionals, the VAs, the FHAs, the 203Ks, the home styles. We do it all. How about questions? Anybody got questions?
So yeah, Dave, I was gonna say in the chats, Naomi wants to know, do you collateralize?
I can broker it to a company that will. We don't in-house, no.
Okay. Joy Steele, our new trainer, would be happy to work the Tennessee leads.
Okay.
Let's see, Normalina, what is the name of the mortgage company? I think you've said it now. Novus, is that the
Novus
name?
Home Mortgage, yep.
And then the Normalina is asking how much DPA given? down payment assistance given?
So it depends on the program, Normalina. Sometimes, depending on the state, like for Florida, I can do a federal home loan bank of $7,500, and Florida will let me use that with their Florida housing, or I can do 5% on an in-house, but the 5% in-house is FHA.
Okay, so you could stack the Florida bond as well with
Yeah.
Oh, that's great.
Well, not with mine, with
Oh,
Federal Home Loan Bank.
okay.
So Florida will allow me to stack that. So will North Carolina, so will Tennessee. So we could do both. Now, North Carolina has some crazy programs to it. And I don't know if anybody here is in North Carolina, but I've got a license to lend up to $50,000 on any one property. So I would just have to dig into the Florida a little harder normally and see what would be necessary to lend additional.
Naomi's in there, North Carolina.
Who is?
Naomi?
Naomi. Okay. So, yes, I would think you and I both know if it's a brand new property on the market, it's a lot of times really tough to get those seller concessions. But I mean, if the house has been on the market a little bit, to offer over what they're asking to cover those concessions, I see that a lot. And that could happen. So as an example, FHA loan, I give them the 3.5 to 5% in-house because they make too much money to do Florida, Normalina, and then we get the seller to cover the closing costs. I just did it here in North Carolina. The person got their appraisal money back from me. They didn't spend any money to buy a $395,000 home, not a dollar. I take that back. They had to do due diligence because North Carolina was due diligence state. So they had to put up some due diligence money, but no escrow. It was zero escrow. And I gave them their $625 for their appraisal back at close. So other than their due diligence money, they didn't need anything. And Normalina and Mike, you guys don't have due diligence in your state, correct?
We have inspection periods, but no.
Okay. Yeah. I mean, North Carolina and South Carolina are tough with the due diligence. So that's money that's paid to the seller right away, and you don't get that money back.
Oh man.
So when Naomi, on your last deal, what was the due diligence on it? Well, I can tell you. Oh, I'm
I was
sorry.
eating lunch. I usually put down 0 and negotiate.
Okay.
The seller come back. But
Okay.
sometimes they take 0.
Okay, well, that's awesome. When I bought my house in Wilmington, I had to do a $5,000 due diligence. So just to let you guys know, if appraisal didn't come in or inspections didn't come in or anything, that money was see you later. I paid that directly to the seller the day they agreed on the terms of the contract. So unfortunately, we have a couple states out there that are like that. But-
Hey, Dave.
Yeah.
Mike Nikolai wants to know, can you build concessions into Michael, that's not a loan question. I'll answer that later. Michael Nikolai, call me when we're done.
I've got a USDA program where we can give a lender credit on it. Usually it's about 12 to $1,500. So, for some of you that work those areas that are USDA, a lender credit helps out, if they're limited in cash. Helps them pay for appraisals, that kind of thing. And I'll even invoice that on that deal. So VAs, USDAs, I'll invoice appraisal. Now the 0.25%, just how that works, that Robert mentioned to you guys, it's a joint venture I have with Robert and EZ. So easy numbers. You hand me a buyer that buys a $400,000 home. We close on it. You guys are getting a check for $1,000 just for using us. Now, if I give you a lead, yeah, you don't get that quarter. This is for you sending that buyer to us.
Any other questions for Dave?
Yeah, I got one.
Yeah.
Dave, it sounds like a lot of the loans and programs that you just covered were, from what I can tell, unique or novel. I mean, I've heard of some of that stuff, but some of the other stuff sounded like just new and or creative. And I'm not the strongest in loans, so maybe I'm, not up to speed. But is that unique to you and your shop? Did you guys make all that stuff up, or do other lenders do all that
No,
stuff
no,
too?
there's other lenders that do this, Greg, but what you have is you have lenders that do a portion of it or some of it or some part of it. Follow me? Where I chose my next lender very carefully to be able to do all these unique things because I'll give you an example. I have a woman, a VA, disabled, just got her master's in teaching. Okay. Tons of student loans, has 2 big car payments for her and her daughter. And she still makes 10 grand a month. But because rates are in the 6s and 7s, right? Because she's got some debt, the best she could buy is maybe a $250,000, $300,000 home.
Yeah.
And there's no way Naomi or Normalina can't tell me they're not running into that problem, right? Where really nice people with decent jobs just can't afford the house payment.
Yeah.
And I would imagine even more so. Naomi, are you up in the Charlotte area or where are you at?
She is.
Yeah, yeah. Mm-hmm.
So I'm sure you're already seeing the increases in homeowners insurance.
Oh yeah.
I just closed a deal on a $400,000 property in Concord, and it was $3,800 a year for their insurance. It's like now you just added $300 a month to their payment. We're not talking about the property taxes that have gone up and then an interest rate that really is not conducive to anybody making less than 120,000 a year.
Yeah, David, wait
Yeah.
until you hear about these our insurance companies here in California.
Oh yeah, I couldn't even
They-
imagine.
They've gone crazy. But David, I have a question quickly.
Yeah.
I have an idea of working with seniors, especially those seniors that want to stay in their home,
Well,
stay in their home and keep them. Can they do a 203K and then reverse mortgage after that home is rehab?
God, that's a great question. I would say yes, but something tells me they might have to wait 7 months, 6 months to do it. I'll double check for you, okay, just to be sure. So,
Great.
because most FHAs, because you're paying the funding fee, right? So, God, that's a great question that I've never been asked in my 25 years. I would think we could. I just would have to find out if they have to have that loan for X period of time. I mean, let's be honest, they're probably going to have it 3 to 6 months just to do the rehab, right?
Oh, absolutely. Yeah.
Yeah.
And I'm talking with seniors that have hoarding problems, seniors
Yeah.
that have equity, but the home is in disrepair. They just,
Yeah.
and and it's also something that I'm contemplating promoting because of keeping seniors in their home, keeping
Oh,
them
yeah,
at
for
home
sure.
rather than going into these assisted living places, and
Yeah.
there goes all their equity that they built up. They've now
No.
given it to the assisted living people.
Yeah, for sure. Reverse mortgage in that world is the way to go. 20 years ago, people used to always say, "Oh, you're stealing from the elderly," but with the costs of today for anything, I mean, go buy fruit. It's expensive, and to be able to stay in their home and not have to worry about a payment for the rest of their life till they die, that's pretty good. I mean, yeah, maybe they can't leave the equity they want to leave to their children, but for themselves on a limited budget, the only thing we're going to have to prove is that they can cover the taxes and insurance, right? That's it. So,
Right.
in that
A
case,
secondary question.
yep.
This page for my website, or our website, do you have a link to this page together with a 1003 that the client could click on that property and just go to work after talking about what I'm going to offer? They
Yes.
could literally see.
Yep, I do have it. I'm gonna pop all these into the chat box.
Great.
And you know what I'm gonna do here? Let me go into chat real quick. Unfortunately, I hate when I'm sharing because then so I'm gonna put my email address in here for everybody. And if they're interested in, doing anything that we just talked about, you can send me your info and I'll get you all set up. But yes, the answer to that question, Ken, is yeah. We'll have a
Appreciate
link on the site. You'll be able to click. Any of my stuff that I send you has a QR code. They can point their phone at it and it'll go right into the application. And they can
Excellent.
fill it out literally on their phone.
Excellent.
I have 4 other staff members that are underneath me that help. Kurt, Jordan, Vicky, any of them can help you out. We'll do soft pulls. I don't know if you guys heard me say that. So for that customer that goes, I don't want my credit pulled, right? We'll do a soft pull for them so that way they don't have a hard credit inquiry. And our applications cost nothing. Nobody's got to pay anything to apply for anything that we do.
Excellent.
And like I said, on veterans, we don't charge them up front for the appraisal. USDA, I can invoice it to the back of the deal for when we close. And Greg, running back to what you were talking about, it's about just having the expansive list of products that you can bring me almost anybody and we can make it work. You can literally bring me a non-citizen from Israel and I can put the deal together.
Yeah, I like what you've built. It's the same thing that I've kind of built with my conversion management concept, which is there is no such thing as a seller situation or property condition that is not something that my expert team cannot address and fix because I've got the best in the entire country, one of each specialist. You remind me of that. It's almost like you've figured out every single kind of creative angle of every loan, every way that it can kind of bend and morph to get the deal done. And then that's sitting on your bench. And that makes a lot of sense to me. Yeah.
Well, Robert can tell you when I came on to where I'm at now, they hired me to take over the purchase division. And I've spent 3 months, literally 8 to 10 hours a day, putting all this together. So, getting everything approved, seeing how much of it, and maybe you guys get lost in some of these words who hasn't been a lender in the past. There's a difference between delegated and non-delegated. Delegated means we write it in-house. In other words, we do the loan, we underwrite the loan, we fund the loan in-house. We do it. Non-delegated means kind of in your world, we're brokering it out to another lender, right? About 80 to 85% of our products here, I now got it where we're delegated, where we underwrite it. We fund it, which means what? We close faster, right? We can do it quicker. So, my hope is that with these products, it can open the doors for you guys to get more deals. Normalina, Naomi, I have manufactured homes. So as long as it's sitting on its own land and it's newer than 1994, I can roll. And I do mean manufactured, not modular. So that thing that's built in a factory on a couple steel beams, carpeting thrown down, and then the walls on top of it, yeah, I do it. So even manufactured homes I can do.
It's awesome. Any more questions for Dave?
Dave, so do you have a portal where we can send someone a link where they can apply online?
Yep, I have it. I can get it to you.
Okay.
Just send me a quick email to that email I sent and I'll send you everything. Robert said I had to keep this to 45 minutes. I'm at 45 minutes.
What was that year you said that they had to be manufactured before?
96.
Okay. And do you have a lot of lenders that are brokering out? I used to broker when I worked at Wells Fargo. I would broker out because our loan programs, they just didn't, they
Yeah,
weren't like
I mean,
what you have.
The answer is yes, I have them. I have companies like Champion and Deep Haven and all these other companies. But my goal was when I first got here to take some of those companies that most people broker to and get our bank set up as an FDIC to delegate. In other words, we underwrite, we fund, right? They buy it off of us. Does that make sense? So, we'll close as Novus Home Mortgage so we can close you quick and do all the underwriting fast. And then it'll still go to Deep Haven or Champion or wherever. But because we can do it in-house, I have leeway to get stuff done and get stuff looked at and, do things like get exceptions and like you said, you used to broker, getting an exception from a broker is death. It's like pulling teeth. It's so hard to get. But when it's delegated, you're like, come on, let's get this thing going.
Yeah,
Yeah.
they would even hit me percentages for trying to get the concessions, the exceptions from
Yep.
upper management.
Oh, absolutely.
I
Yeah.
hated that.
Yep. And I'll leave you with one other thing, because I'm sure it's something that you guys will email me or text me later. Rates on the tough to get done products, guys. Yes, it's expensive. I'm not going to lie. If you've never done a flip before and your credit score is 640, 660, yeah, that interest rate's going to be 12 or 13%. Okay. If you're doing DSCR and you own a couple homes, it's probably going to be in the 8s. Does that make sense? So it really just depends on that investor or that buyer. I guess that's it, Ron. Nobody else has anything else.
You want to stop sharing, Dave?
Oh yeah, I'm sorry. And Greg, I'll absolutely talk to you about geofencing. So
So, all right, Dave, I appreciate it. Thanks for coming on. Anybody else have any questions?
How many do you work with? I think you said this. Do you work with a lot of flippers investors yourself directly? Is that a big or small piece of your customer base?
it's a small piece now. As I've started to market it, we're getting more and more. And the ones that we get, honestly, Greg, do 2, 3, 4, 5, right? They don't just do one with me because I can do an unlimited amount. It used to be that a lot of lenders said, oh, you can only do 10. I can do 50. Doesn't matter. That's why early in that conversation, I said, let's not take that investors hold 200 grand to buy a home, right? Let's take 40 grand from them and sell them 5 properties instead of 1, right?
Yes, sir.
And then,
Yeah.
and then tell them, diverse your portfolio. Okay, maybe you got to pay a prepayment penalty. All right, whatever. But guess what? Now you don't have all your eggs in one basket. We got it spread across 5, and let's hit home runs on 3.
Yeah.
The other 2 come in average. You don't care because you just hit 3 home runs and 2 doubles instead of 1 home run. And that's really what I'm trying to get across to everybody here. Use those investors to allow you to sell 5 homes, not 1.
It's all about transaction volume. Well, maybe not all about, but boy, is that a big stick, a big lever from which to draw upon. Well, I'll just say this. If you can envision Pac-Man, every one of your flippers is one of those little white dots. and I'm Pac-Man wearing a red shirt. And I'm coming for all of them. So I need to meet all of them. I need a Zoom. I need an intro. I need an edification. I need to meet every one of them and have a little talky talk.
You mean, Dave, it's kind of like if you're a Dodger fan, they hit 3 home runs, or a Cleveland fan, they hits no home runs?
Yes, yeah, it's kind of like that. Yeah, very much like that.
Had to get that in, didn't we?
Yep, or when you have the best basketball team in the league and they lose in the second round. Yes.
That's Cleveland.
Yeah, it's disappointing.
All right, I appreciate it, Dave. Thanks.
Thank
for
you.
your
Hey, thanks,
time.
Dave.
All right,
Good
bye.
information.
All right, see ya. Mike Nicolai, I will address your question in front of the group. I'll wait for our lender to leave, though.
Thank you, Dave, for your information.
Good, there we go. So lenders don't know anything about buyer's premium, Michael. Remember, you're building the buyer's premium into the purchase price. So obviously, if the loan can support it, yes. If the loan can't support it, no. So, you know, buyer's premiums are wonderful because you can build a lot of stuff into them and do a lot of creative things with financing. It's one of the reasons why Dave's companies love using us, is because everything's getting rolled into the financing. You know, they don't have to deal with these. Anyways, you get my drift, right?
Yeah, no, I thought that we could. I just wanted to double check and make sure, because that's a brilliant way of handling things.
Yeah. Well, the buyer's premium is amazing, especially for our REI friends, as we're all finding out. But there are some creative ways that you can help your consumers as well. So, other than that, anybody else have any questions about anything for us next week? Interim financing. If you have some wholesalers, you have some REI people that you're doing business with or want to do business with, invite them to this next Thursday. It could change their lives. So, transactional funding. So, all right. With that being said, thanks everybody, and we'll see you on Monday, if not sooner. And thanks for showing up.
Thanks so much for tuning into Easy Real Estate Platform's Topic Thursdays. We hope to see you again next week, and make sure you check out our Facebook groups. The links are in the description.